In the foreign exchange market, you buy or sell currencies. Placing a trade in the foreign exchange market is really easy. The objective of Forex trading is to exchange one currency for another with the expectation that the price will change. You want the currency you bought to increase in value compared to the one you sold in order for you to make money. So let's talk through an example. Let's say you purchase 10,000 pounds at the GBP USD exchange rate of 1.1500. And what does that mean? That simply means that 1 pound is equal to 1.15 US dollars. 1 week later, you exchange your 10,000 pounds back into US dollars at the exchange rate of 1.23. With this, you earn a profit of $800. So how did that work out? Well, 10,000 GBP times the exchange rate of 1.15 equals 11,500 USD. So 10,000 GBP is equal to 11,500 USD. So now we have 10,000 GBP, we're holding on to it, and let's say a week goes by, and now the exchange rate, instead of being 1.1500, is 1.2300. And what does that mean? That means that now 1 pound is equal to 1.23 US dollars instead of 1.15 US dollars, which means the value of the pound has gone up. So now we multiply the 10,000 GBP times the exchange rate of 1.2300 to get us back to our USD, which would be 12,300. You can see the difference between the 12,300 and the 11,500 is $800. So you would earn a profit in this case of $800. So an exchange rate, the 1.15 or the 1.23, is simply the ratio of one currency valued against another currency. So for example, the GBP USD exchange rate indicates how many British pounds can purchase 1 US dollar, or how many US dollars you need to buy 1 British pound. So the reason they're quoted in pairs such as GBP USD or EUR USD, Euro USD, is because in every trade, you are simultaneously buying one currency and selling another. So let's look at an example of a foreign exchange rate for the euro versus the US dollar. The first listed currency, the euro to the left of the slash, is known as the base currency. The second currency, in this case the US dollar on the right, is called the counter or quote currency. When buying, the exchange rate tells us how much of the quote currency is needed to buy 1 unit of the base currency. In the example above, you would have to pay 1.49368 US dollars in order to buy 1 euro. If you were to sell this pair, the exchange rate tells us how many units of the quote currency you would receive for selling 1 unit of the base currency. So in the example above, you would receive 1.49368 US dollars by selling 1 euro. So the base currency is the basis for the buy or the sell. So in this example above, you would buy the pair if you think the euro will go up in value compared to the US dollar, and you would sell the pair if you think the euro will go down in value compared to the US dollar. So now let's talk about exactly what buying and selling means. You'll probably hear the phrase going long or going short quite often in the Forex market, so we're going to talk about exactly what that means. So when looking at a pair, the first thing you need to determine is whether you're going to buy or sell it, right? For example, if you want to buy the Euro USD, which actually means you're buying the euro and selling the US dollar, you want the euro to rise in value, and then you would sell it back at a higher price to make a profit. This is called going long or taking a long position. So just remember that going long means to buy. If you wanted to sell the Euro USD, which actually means you are selling the euro and buying the US dollar, you want the euro to go down in value, and then you would buy it back at a lower price to make a profit. And this is called going short or taking a short position. So just remember, going short means sell. Anytime you want to buy or sell a currency in the Forex market, you must do so through what's called a broker. Now we're going to talk more about exactly what a broker is and how they work later on. But basically, if you want to buy or sell a currency, you must sell it or buy it from the broker you are using. This is where there are always 2 prices involved. These prices are called the bid price and the ask price. So what's the difference between the bid price and the ask price? Well, if you want to sell something, what happens is the broker will buy it from you at the bid price. So the bid price is the price the broker is willing to buy the base currency in exchange for the quote currency. If you want to buy something, the broker will sell or offer it to you at the ask price, the price at which the broker will sell the base currency in exchange for the quote currency. The difference between the bid and the ask price is known as spread. Spread is one of the ways that a broker makes a profit. On the Euro USD quote above, the bid price is 1.34568 and the ask price is 1.34588. If you want to sell the euro, you would click sell and you will sell euros at 1.34568. If you want to buy euros, you would click buy and you will buy the euros at 1.34588. So in this section, we got a little bit more technical. If you need to go back and watch this section again, go ahead and do that so you can really understand this. If you rewatch this section and you still didn't understand it, don't worry too much. This information is really just to help you grasp and understand exactly what's going on behind the scenes. And by understanding it, you'll have a better knowledge of Forex as a whole. But as the sections go on, you may actually pick up on more of this. Maybe come back and watch it later and better grasp these concepts. So if you need to, move on to the next section or rewatch this section, and we'll see you soon.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.